What if I told you that the real engine of global power isn't military strength, or natural resources, or technology? It's debt. Not just any debt, but a self-reinforcing cycle, engineered over centuries, that ensures no nation ever truly escapes it. Because here's the puzzle no one can quite answer. If every country owes money, and every government is drowning in debt, who exactly is the creditor? Who is on the other side of the balance sheet? And why does the global financial system seem designed so that every attempt to fix the debt problem only makes it worse? Today, we're going to peel back the layers of a system most people never question. A system that quietly shapes wars, elections, currencies, and even the rise and fall of empires. This is the hidden story of the secret debt cycle, a mechanism so deeply embedded in the world economy that nations can't operate without it, yet remain permanently trapped because of it. And it all began long before central banks, long before modern currencies, long before any of the institutions we assume are responsible today. Stay with me, because once you understand how this cycle began, you'll never look at money or national power the same way again. The story begins thousands of years ago with the invention of state-backed money. Early civilizations, Mesopotamia, Egypt, Rome had one fundamental problem. They needed armies, infrastructure, and administration, but they didn't have infinite resources, so they invented a solution: debt. Debt wasn't just a financial tool, it was a political one. Instead of paying soldiers with gold they didn't have, governments issued IOUs. These IOUs became early currency. Farmers accepted them because taxes had to be paid using them. Immediately, something powerful happened. The state became both the issuer of money and the collector of debt. But as empires grew, so did their ambitions, and their debts grew even faster. The Roman Empire collapsed partly under the weight of its own borrowing. Medieval kingdoms went bankrupt, funding endless wars. The pattern was set early. Debt allowed states to grow. Debt forced states to depend on lenders. But the real turning point came in the 1600s. The Dutch Republic and, later, England did something revolutionary. They created public debt markets. Instead of borrowing from a single wealthy family or a foreign king, governments raised money from many investors, selling bonds that could be traded freely. This had three massive consequences. 1. Governments could borrow more than ever before because the risk was spread out. 2. Wars could be financed indefinitely. Military budgets exploded. 3. Debt became a permanent feature of national power, not a temporary emergency measure. But there was a catch, a hidden catch. Once governments depended on bond markets, the lenders gained leverage. Not obvious political power, something far greater: influence over interest rates, currency, stability, and fiscal policy. If a government acted recklessly, lenders sold bonds. Interest rates spiked, and the government suddenly needed to borrow even more. A dependency loop began to form. Then came the next evolution: central banking. Central banks changed everything. Instead of governments begging for money, central banks could create it. That sounds like freedom, but it created a new dependency. Governments began funding themselves not through taxes, but through debt monetization. The more they borrowed, the more money the central bank created. The more money created, the more the economy relied on artificially cheap credit. By the 20th century, every major nation had become addicted to long-term borrowing. Debt wasn't a tool anymore. It was the foundation of the entire system. Wars, debt; infrastructure, debt; healthcare, pensions, education, debt. Every major national program became tied to borrowing. But then something happened that silently locked the whole world into the cycle forever: the end of the gold standard. In 1971, the United States decoupled the dollar from gold. Overnight, money stopped being a tangible asset and became a pure government promise, backed only by confidence. And once money became unlimited, debt became unlimited. But something bizarre happened next. As countries borrowed more, their economies looked stronger. GDP went up, employment went up, exports grew. Debt became the fuel of growth, and growth justified more debt. A self-reinforcing cycle was created. But the side effects were catastrophic. Asset bubbles, currency devaluation, inflation waves, crashes, repeating every decade, wealth inequality exploding. Now nations faced a permanent dilemma. If they stopped borrowing, their economies would collapse. If they continued borrowing, the debt would become unpayable. This is the moment the secret debt cycle became irreversible. And everyone, governments, banks, corporations, citizens, got trapped in it. Let's fast forward to the modern era. Every nation is now dependent on debt in three ways. Without new borrowing, GDP stalls. Politicians lose elections, markets panic, so governments borrow more, and lenders profit more. Countries now borrow money just to service interest. This is the definition of dependency. Without money printing, interest rates would skyrocket, markets would freeze, banks would fail. So central banks keep intervening, which inflates markets and forces governments to borrow even more. Debt has become both the medicine and the poison. Governments have tried everything. Cut spending gives growth, slows, gives tax revenues fall, gives debt increases, creates short-term relief, gives causes long-term inflation, gives requires more debt, fights inflation, gives slows economy, gives increases debt service costs, stimulates borrowing, gives inflates asset bubbles, gives creates bigger crashes. Every solution feeds the cycle. Every fix creates a new dependency. Because the system was designed intentionally or not, to make debt the backbone of national survival. There is no escape, only management. But the real shock comes next. Visual charts rising, global debt numbers exploding. Let's look at the world today. Global debt is now over $300 trillion, more than 3 times global GDP. And yet every government is planning to borrow more. Why? Because the cycle forces them to. Here are the repeating patterns. Debt grows faster than the economy in every major country. This means nations are sinking deeper, not climbing out. Every crisis is solved with more debt. 2008 gives debt. 2020 gives debt. Future recession gives more debt. Countries cannot repay, only refinance. Debt is no longer a loan. It's a subscription you never cancel. The wealth gap widens with every cycle because new money enters the system through banks, lenders, and asset holders. Regular citizens get inflation, top institutions get assets. The system needs constant growth, but growth now requires debt. You cannot remove one without collapsing the other. This is the paradox at the heart of the modern global economy. The world needs debt to function, but the debt is what threatens the world. So what is the core truth behind the secret debt cycle? It's this. Nations no longer control their own economic destiny. Their financial survival depends on global bond markets, ratings, agencies, central bank liquidity, international lenders, foreign investors, currency, stability, capital flows, interest rate decisions. Corporate demand for credit debt is not merely money owed, it is control, a quiet form of leverage, a structure that ensures governments cannot act freely. Policies must align with lender expectations. No nation can break away without triggering financial chaos. Crises always push countries deeper into dependency. Debt has become the invisible tool that ties countries to global financial networks. A nation can replace its leaders. A nation can rewrite its laws. A nation can restructure its economy. But it cannot escape its debt, and that is the real secret. Debt is the new empire. An empire without borders. An empire that requires no armies. An empire that expands every time a country tries to grow. Visual slow zoom out from global markets to a single individual staring at the screen. It is a permanent feature of how nations function, grow, and compete. The more nations try to escape, the deeper they sink into it. Knowing how the cycle works helps you make smarter decisions about savings, investing, inflation, and long-term financial security. The world is entering a new phase where debt levels are higher than ever at the exact same time. The tools to manage them are less effective than ever. When the next crisis hits, governments will reach for the only solution they have left, more debt, and the cycle will tighten one more turn. If you want to dive deeper into the hidden mechanisms behind money, debt, and economic power, subscribe, because we're just getting started. Like to help this video reach more people. Comment if you want the next episode in this series and tell me what part shocked you the most. This is the hidden financial system that shapes the world, and together, we're going to keep uncovering its secrets.